and get more people into it, not adopting it as a medium of exchange or a unit of account or any kind of money, but as a get-rich-quick scheme, as they ride the Bitcoin rocket ship to the moon, and it goes to $1 million or $10 million of Bitcoin, and that's what's going on.
First of all, it's not a scheme. It's a protocol. It's being adopted, and you say, what are they buying it for? They're buying it as a form of money that stores value because it has a life.
Yes, and it's been 16 or 17 years, and it's still trivial.
Well, but it takes time. It takes time for the medium of exchange piece of it to come in.
It's never going to be a medium. In fact, even the Bitcoin community admits it'll never be a medium of exchange.
That's not true.
There are other tokens for that. They claim it's digital gold.
It is digital gold. That is not true at all. It will become a medium of exchange.
When?
Sharply dismisses Bitcoin's success, framing it entirely as a speculative frenzy, a get-rich-quick scheme built on the greater fool theory. He argues that the vast majority of buyers are not adopting it as a medium of exchange or an alternative to the dollar, but as a mechanism to amass more dollars by selling at a higher price. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
The Bitcoin software and code is controlled by a group called the core developers, and the code is open source. Everyone can see it. It's not very, so there's nothing secret about it. And improvements and changes are proposed and voted on and then accepted. And if somebody really wants to change it, they'll try a hard fork, and of course nobody will follow them. But upgrades and changes, small things generally, are made by this group of people over time. And as with any group of people, they don't always agree. And there's a debate going on right now over something called op return, which is something to do with the space on each block and what can be in it. And there's a very strong argument on one side, a strong argument on the other side. I have a view on it. I'm not going to state it here because it's not the point. The point is that Bitcoin, the software, will have to evolve over some period of time to deal with various threats, one of which is quantum computing, which I think doesn't really become a threat for at least 10 years and maybe 20, based on the scientists and the things I've read, and I read a lot about it. So I'm not terribly worried about it. But the point is that it could become a threat, and quantum computing would allow people to hack the coins, hack the passwords on the coins, which is what makes the coins secure. So as Brent and I were talking about, the whole notion is completely immutable. There's some very small percentage chance that someday it's not, unless it's upgraded, and that upgrade would have to take place as a result of the core developers. And so, as Saylor said to me, he said, look, Larry, the problem with human beings is they want to fix stuff, they want to tinker with stuff, and this thing is working perfectly and beautifully. And the only thing that concerns me is that some group of rogue core developers would mess with it. Now, as I say, there are safeguards because it would have to be approved, voted on, accepted, forked, et cetera. So I rate this as all extremely low stuff, but it's not zero. The second criticism, I think, well, that's really the major one. That's really the only one I can think of. I've said to other people, though, if for some reason adoption were to slow down and people were to just kind of and this is why when I argue with Peter on this, Peter's like, well, okay, it's going to blow up here, Larry. It's eventually going to die. And I'm like, okay, fine. What's the proximal event that's going to cause it to blow up? Because it's been 16 years and it hasn't blown up. It's retreated. It's had big drawdowns. We all know that. But every time it comes back because the underlying properties are what they are. And as long as adoption continues, as long as more people, I call it, in my book, I call it dogs eating the food. One of the great old venture capitalists at Sequoia said, when I'm looking at companies to invest in, I want to see situations where the dogs are eating the food, and more dogs and more food over time. And so, implying increased demand. And so, if you look at addresses, if you look at hash rate, if you look at usage, if you look at anything, transactions, et cetera, in Bitcoin land, it's growing consistently.
Yeah, but when you talk about adoption, I don't know why people keep saying Bitcoin adoption. What are they adopting it for? They're not adopting it as money. People aren't buying Bitcoin, the vast majority, for the reasons that we're discussing. They're not looking for an alternative to the dollar. They're looking for Bitcoin as a way to amass more dollars. They're buying Bitcoin because they think the price is going to go up and they'll be able to sell it and get more dollars than they started. So yes, it's succeeded for 15 or 16 years because we haven't run out of greater fools to buy Bitcoin at a higher price. And what's happened recently to kind of propel it higher is some of the early adopters, the big OGs who bought Bitcoin a long time ago, amassed so much money in this pyramid that they were able to, entice Wall Street to get into it with the prospects of making money, booking bets on Bitcoin with ETFs and getting underwriting fees on Bitcoin treasury companies. And then they had so much money that they bought off politicians. They bought off Trump and they put him in office, and now they're using the power of the government to try to extend this scheme and get more people into it, not adopting it as a medium of exchange or a unit of account or any kind of money, but as a get-rich-quick scheme as they ride the Bitcoin rocket ship to the moon, and it goes to $1 million or $10 million of Bitcoin, and that's what's going on.
First of all, it's not a scheme. It's a protocol. It's being adopted. And you say, what are they buying it for? They're buying it as a form of money that stores value because it has a limited supply, full stop. The medium of exchange, means of exchange, sure, that's nascent. There's something called the Lightning Network, which I have a Lightning Network wallet on my phone. When I go to any Bitcoin conference, I can buy everything I want with a QR code and immediately transact in Bitcoin. The cost is about a penny or less, as opposed to paying 3 or 4% for MasterCard.
What percent of Bitcoin transactions are that versus trades?
Oh, it's trivial right now because we're just getting going.
Yes, and it's been 16 or 17 years, and it's still trivial.
Well, but it takes time. It takes time for the medium of exchange piece of it to come in.
It's never going to be a medium. In fact, even the Bitcoin community admits it'll never be a medium of exchange.
That's not true.
There are other tokens for that. They claim it's digital gold.
It is digital gold. That is not true at all. It will become a medium of exchange.
When?
In the next couple of decades.
When will gold become a medium of exchange?
Well, it's already been a medium of exchange.
It has been, but when will it become that way again?
I don't know. It could be, but it could be used as a medium of exchange right now. Better than Bitcoin. Bitcoin is too slow and too expensive to use for anything.
Bitcoin's slower than
trading.
Is it slower than gold?
Better than Bitcoin. I can send $1 billion from one end of the world to the other in 10 minutes and have it fully verified.
Yeah, and I can send $1 billion worth of gold
faster
and cheaper.
On a 747.
No, with a token. I can transfer the ownership. You don't have to.
And I have to trust you issuing the token?
I'd rather.
Thank you, no. Thank you, fucking no. I don't trust you as far as I can throw you.
I'd rather trust a reputable custodian with something than to trust the collective delusions of a bunch of people that nothing is something. All you're trusting is that the people that own Bitcoin don't wake up and realize they got nothing.
I just want to.
There we go.
Hey.
I just want to point out that the reason that Peter's wearing a green tie rather than a gold tie is he knows the dollar's not dead yet.
I wore my gold tie on the first day.
I don't think the average Bitcoin owner believes that they've got something that is nothing. They know that they've got the most secure, sound form of money in the world, and they know that the stock-to-flow ratio is much higher than gold and going down every 4 years. And ultimately, Bitcoin is going to demonetize gold in the same way that gold demonetized silver.
Well, then, if that's the case, why has Bitcoin lost 1/3 of its value priced in gold since its peak? In fact, Bitcoin is worth less in terms of gold now than it was 4 years ago, despite all this so-called adoption. The Bitcoin president, all the Bitcoin ETFs, all the Bitcoin strategy companies, Bitcoin has lost 1/3 of its value relative to a rock.
Yeah, so
a metal.
I thought it was a metal. If you take a look at that chart, and the chart was in my presentation yesterday, that charts the number of ounces of gold against Bitcoin, it has been up and to the right since Bitcoin has been formed. Right now, it is on a drawdown. It's roughly at 24. It's been as high as 40. It's going to 60, then it's going to 80, then it's going to 100, then it's going to 120. I mean, Bitcoin's going to demonetize gold. It's just that simple. It's a better form of money.
No, it's not. It's not any form of money.
A stablecoin is a digital token that settles instantly, but is tied to an underlying asset. Brent notes that 99% of existing stablecoins are tied to the US dollar, driven by free market demand from international users who view the dollar as superior to their local currency, especially in emerging markets. This technology, he argues, will be leveraged as a digital weapon to re-dollarize the world, helping the U.S. fund itself and solidify its currency's global status.
My speech later today, I think I'm on at noon or 12:30 or something, we'll go over this in detail. But essentially what I think is happening is that the technology that was developed in the private market by the Bitcoin and the digital assets and crypto, I think woke the United States and other countries up to the fact that they could no longer just rest on their laurels and use the fact that they could enforce legal tender laws to keep their money as the medium of exchange. And in many ways, I would argue that the whole rollout of digital assets and the rise of Bitcoin was maybe the greatest beta test in history to see whether it would be adopted, whether it would work, how fast it would work, how tough it would be to regulate. But I think they have now started to adopt that private technology on a regular or on a regulated and official state sponsored basis. And you've heard Scott Bessent talk about it. You've heard some other government leaders talk about it. They passed a Genius Act earlier this year, which is a way to regulate stablecoins, and it talks about what they can and can't do. And essentially, a stablecoin is a digital token that can be passed around the world instantaneously, settles instantly, and then that token is tied to some other asset. So you don't buy a stable coin thinking it's going to increase a lot in value like some of the, it's not like a Dogecoin or a Bitcoin where you're expecting it to rise in value. What it is it's tied to some other asset, and it should stay stable versus that asset. So you could have a gold stablecoin, which is I think what Peter was talking about, or a gold token, and it will, that token will stay stable versus the price of gold. It may not stay stable versus the dollar or Bitcoin or something else, but that token will track gold. 99% of the stable coins already in existence are already tied to the United States dollars. And the reason that's important is because that was the private market, entrepreneurs meeting demand that people wanted to hold dollars. It's not 99% US dollars because the market wanted 99% gold and they said, no, we're giving you dollars anyway. That was driven by the free market. And I think the United States now realizes that it can adopt that technology and use it as a way to not only help fund itself going forward. We all know about the challenges the United States has in funding itself. But more than that, they can use it as a digital weapon, for lack of a better way of saying it, to dollarize the rest of the world rather than de-dollarize the rest of the world. Yeah. Because as much as we as Americans sit here and talk about how bad the dollar is, for many other citizens around the world, the dollar is much better than their local currency. And all you have to do is, next time you travel, just talk to them. Ask them whether they would rather hold their local currency or a US dollar. Most times they will say a US dollar, especially if you're traveling to an emerging country or a developing country. For them, they look at the US dollar as stability. Now, we in this room may think that's ridiculous. We may not like it. But the market says that is the case. That's not me saying it. That's the market telling me that's what they're saying. And so I think the future is going to be some kind of a combination of government-issued fiat as well as the digitized technology and innovation that's been developed over the last 10, 15 years.
Yeah. I think the main reason, though, that the majority of stable coins are denominated in dollars is Bitcoin is generally expressed in dollars, just the way gold is expressed in dollars. People around the world think of gold and a dollar price, and so they thought that with Bitcoin, they promote Bitcoin that way. But the demand, the vast majority of the demand for stablecoins is for people who want to trade Bitcoin and they need something to trade in and out of. And so when they want to sell Bitcoin, they can move into a Tether or a USD token, and then they can go back and forth. And so that's the main use case for stablecoins, is to facilitate trading in Bitcoin or other tokens. And so it's kind of like an on and off ramp in and out of crypto, but I don't see it being widely adopted by people who say they want dollars, because why would you hold dollars in a non-interest bearing stable coin? If you have dollars that you want to hold, at least get interest on them, at least put them in a money market, Why buy a stable coin and let the stable coin issuer keep all your interest while the dollar depreciates?
As an American,
that's the American point.
Peter's right that part of the use case for stable coins is an on-ramp and off-ramp for dollars. And just so, I don't know if everyone here knows what stable coins are. Stable coins are coins they're like crypto, that you can trade through a crypto account, but Tether and Circle are the two biggest issuers. They're about $200 billion total in size. And they buy treasury bills behind it. They take in your cash, buy a treasury bill, and then issue you a token that represents a dollar. But let me say, Peter's right. One of the main use cases, not the only main use case for stable coins, is an on-ramp and off-ramp for crypto trading. But what really drove stable coin adoption is I view the stable coins as an alternative to the SWIFT network. So what happened is when the U.S. decided to sanction Russia and sanction Iran and say to all the business people there, and I was in Prague recently, earlier this year, and I met with a lot of Russian business people, suddenly they had no way to pay anybody or move money or receive money or whatever it might be. But they quickly, smart entrepreneurial workaround, they get a Kraken account, and the dollar is the universal unit of measure, so they just say, fine, pay me, stablecoin dollars into my Kraken account.
But doesn't the U.S. government still have the ability to go after those tokens? They know who owns them. They
not if they
track of them in a wallet or
Kraken's
not yet.
Yeah, not yet.
I mean, I'd say, look, if you really want to get out, then just go to gold. Why stay in the dollar, right? I mean, why not just take a dollar?
But we're talking about means of exchange, not. I mean, this.
Well,
but it's a different argument.
gold-backed stable coin is just as easy to exchange as a dollar-backed stable coin. You have the same thing where you have to trust a third party, but at least it's a third party that the U.S. government can't intervene. If the gold is stored in a custodian that's not in the United States, unless we're going to invade that custodian with troops,
money, though.
we can't get the gold.
But you don't store money. You store assets. Investing and using money on a day-to-day basis.
You can store money. That's what banks were supposed to do. They store your money. At least when we had money.
Okay, so you asked why would somebody hold a coin that doesn't pay interest, get a money market fund at a minimum? As an American, you're totally right. That makes a lot of sense. But if you live in Argentina, or you live in Egypt, or you live in Turkey, or you live in Bangladesh, and you don't want to hold the local currency, what you end up doing is you end up holding US dollar physical cash. And that's why if you go to any bazaar or little market in anywhere in the world, you can exchange local currency for dollars. Because everywhere in the world uses dollars on the black market.
Right, but if you're going to go to a token.
This allows citizens of those countries who don't have a bank account, and even if they do have a bank account, their bank will not allow them to hold a US dollar balance. And even if they do have a bank that allows a crisis, this solves all those problems.
But that's because it would be not as convenient for them to transact in gold coins. But once they're going to move onto a token and they're going to have it in their smartphone and their wallet and they're going to exchange, once you're choosing tokens, at that point, dollars lose their advantage over gold.
They don't.
Gold has an advantage over the dollar in the form of a token. Because
then why hasn't all the money? There is a digital gold token right now, and there's digital US dollars. Why haven't it migrated from Tether?
The reason right now the demand for tokens is primary as a get-rich-quick scheme. It's speculative money trying to get rich, and therefore they're not interested in a gold token.
We're not talking about gold mining companies. We're talking about money.
Let me finish. when the demand for tokens becomes to use them in the real world as a substitute for money, as a medium of exchange, as a unit of account, that's when demand for gold tokens is going to grow. But right now, it's just a speculative frenzy. And so people don't want to buy gold because they don't think there's enough upside. They want to buy what's going to go to the moon, right? That's what they want, and that's where the demand is. There are a lot of gold-backed tokens, but it's interesting. You're talking about Tether. What has Tether been buying? They're buying gold. They're taking the money that they're getting, and they're buying gold. They're buying gold royalty companies. They must know something. They're buying all this gold with the dollars they got.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.